Assalamualaikum and a very good morning. Today I would like to share with you the banks and financial institution topic. Introduction goes here. Operations of commercial banks and finance company in Malaysia are governed by BAFIA and closely supervised by Bank Negara Malaysia. Okay, what is bank? Bank is any person who carries on the business of receiving money in any currency or current or deposit account, paying and collecting check drawn by or paid in by customer, and making advance to customer, and include such other business as Bank Negara Malaysia with approval from the minister. The first subtopic is Resident Bank under section 16C BAFIA 1989. Banking business source is facts on world income scope, namely banking business income wherever accruing or derived. World income scope only applies to banking business. Okay, accrual of such foreign income is subject to Malaysian income tax. Double tax relief is for the foreign income that suffers foreign tax in two ways, which against the Malaysian income tax payable. The first one is unilateral relief. 50% of foreign tax suffered, which is computed in the event the foreign country does not have a double taxation agreement with Malaysia. The second one is bilateral relief, computed when the foreign country is a treaty country with Malaysia. Overseas business laws from banking, section 16C and section 44 clause 2. By reference to world income scope, statutory income from the business of banking is computed. Adjusted lot for banking is also determined, but it would not be allowed to set off at the aggregate income level because the availability of such deduction is not provided. 44 clause 2 permits only Malaysia current year business loss against aggregate income. Deductibility of adjusted loss is only restricted to Malaysian banking business income accruing in or derived from Malaysia. Okay, the third one is non-banking business income. Resident bank carries on leasing business and or investment activities. The scope of income tax would be the modified territorial scope. Malaysian derived income and foreign source income received in Malaysia from outside Malaysia.
Okay, Assalamualaikum. Next is bank with overseas subsidiary. In the event of overseas subsidiary pays dividend to its Malaysia holding company, then the dividend income received into Malaysia would be subjected to Malaysia tax when received. The dividend income would be treated as an investment income. So, under bank with overseas subsidiary consists of two, which is 4.1 is foreign withholding, tax imposed on dividend income, which is they're going to have two relief from on the dividend income. The first is bilateral relief. This is the calculation and we choose which is lower. And next is unilateral relief. So, next is, the definition is underlying tax. Tax imposed on the profit arising in a foreign country when dividend is paid. So it is part of the foreign tax, and it used in complete bilateral relief, and if it is counted when there is an article of double deduction. Next is incentive to bank. Under incentive to bank have two exemption, which is one is refer to income tax exemption number 16, order PU class A 278/2007, and second is income tax exemption number 12, order 2007 PU class A 154/2007.
Okay, now I will explain about the chargeable income. Okay, chargeable income is computed according to general income tax provision as follows. Gross income, section 4A, less expense wholly and exclusively incurred in the production of income. Adjusted income, less capital allowance, get statutory income, then less business losses, business brought forward, which is business in Malaysia, and chargeable income. Now, the interest paid by bank or finance companies. Okay, this is the interest paid by bank or finance company is about for non-resident, which is not in the status is not in Malaysia. Okay, so that the non-resident will receive interest, but they exempted from withholding tax. The exempted only if it is paid by Islamic Bank or International Banking Act 1983 or need by approved by Ministry of Finance. Okay, but the exemption does not apply if the branch of a foreign bank which is the business in Malaysia or not. Okay, the purpose is to maintain the net working funds. The 7.1 is withholding tax on net working funds. Okay, this is the withholding tax on net working fund is to maintain the 6% of the total asset or 10 million, whichever is lower, either 10%, either 10 million or 6%. Okay, now the foreign bank will normally remit funds from an overseas branch or head office. Okay, so the interest is 15% withholding tax. Okay, now the tax planning. Okay, tax planning means that tax efficient for interest to be charged by the overseas branch or head office when funds are remitted into Malaysia. Okay, the corporate tax is 25%, and the withholding tax at 15%.
Tax planning on foreign income. So in Malaysia, Malaysian banks are taxed on a world score basis. It is advisable for banking institutions in Malaysia to set up a subsidiary in the foreign country. Why? Because the profit of the subsidiary will not be taxable in Malaysia, and only dividend which is received from the foreign subsidiary will receive in Malaysia are taxable. But that banking institution in Malaysia need to consider on the tax planning for foreign income is they need to consider the withholding tax on the dividend income and the possibility of recovering underlying tax. Next topic is on the investment in shares and property held by bank. So it is important for the banking institution to differentiate shares as a long-term investment and a trading stock. Why? Because for the long-term investment, the profit or gain investment is not subject to tax. Because it is not part of the ordinary business of the banking institution, and the investment not made in the course of the banking operation. While for the trading stock, the profit and gains from the trading stock is subject to tax because the investment is linked with the deposit and withdrawal of cash from the banking institution. And furthermore, the investment made are part of the business in the banking operation. Yes.
I will explain about the deductibility of bad debt. Okay, this is contained in the section 34 clause 2 of the requirement, state that it has to be a trade debt. Number 2, it has to be reasonably estimated in all circumstances to be wholly or partly recoverable. And number 3 is that it arises in the course of carrying on the business and not from taking over the debt from other traders. Okay, the 10.1 is the meaning for the reasonably estimated is that show all necessary actions including the legal actions and are taken to recover the debt. Okay, it allows tax deduction if a debtor is insolvent, debtor has absconded, debtor has passed away and debtor is statute barred. Okay, 10.2 is the illegal loans. Under the case of CKB Limited and KPHDN, the bank made an illegal loan to the company and the company has defaulted the loan. And bank claimed the tax deduction, but the revenue disallowed this because of illegality. Okay, 10.3 is the non-performing loan. Bank are allowed specific provision for bad debts in relation to non-performing loan. Okay, this refer under the section 34 clause 3A. Okay, interest in suspense, interest income received or receivable for the year assessment would be subject to tax notwithstanding that the interest income has not been received and the interest in suspense is not treated as income for accounting purposes. However, section 24 clause 1 state that it will be assessed in the business income.
Overseas branch exemption, which is in income tax exemption number 7 order 2009 PUA 413/2009. Okay, first is resident bank carry on banking or Islamic banking through its overseas branch or related associate company outside Malaysia will be given tax exemption for 5 years under two conditions, which is an application made to Bank Negara during 24th October 2009 until this year end, which is 31 December 2015. First of all, let me explain on the related associate company. Related associate company, which is the bank have share capital at least 20% of the company to being called as related associate company. Okay, Next is the commencement of business within 2 years from the date of approval from Bank Negara. After the application was made, the bank must commence the business within 2 years after they had the approval from Bank Negara. Next, the exemption period was determined by bank shall not later than third year of business commencements on banking and Islamic banking. The exemption amount will be credited to an exempt income account from 2 tiers exempt dividend can be paid.